Today we're going to talk about all-time highs in the stock market. So right now it's the end of 2023. You're starting to see news headlines talking about the stock market, or the S&P 500 specifically, is close to getting to its all-time high again. And so this is going back, the most recent time the S&P hit its all-time high was going back to January 2022. So 2022 was not a great year for the market. 2023 has been much better. And here we are again, the S&P is getting ready to hit an all-time high. And I want to talk about, as long-term investors, what is so important to understand about long-term highs. And so the first thing that I want to talk about when it comes to long-time highs in the stock market is how often does this happen? Well, if you go back to 1950 to today, so a little over 70 years, the market has hit all-time highs over 1,500 times, or on average a little more than 25 times a year. Now, while that seems like a lot, right, 1,500 times over 25 times a year you're going to hear about all-time highs, what does that mean? Well, there are a lot more than 25 trading days, or more than 25 days that the stock market is open in the course of a year. And if you look at the numbers and you say how much is the market trading at all-time highs versus not trading at all-time highs, well, the market is only trading at all-time highs about 10% of the time. And so what does that mean? This is the most important thing that I want to talk about with all-time highs. It's not the all-time highs. It's that if you're at all-time highs 10% of the time, then 90% of your investment experience will be under the all-time high. So 90% of being a long-term investor is going to be seeing a portion of your portfolio that hits its all-time high, seeing a value on your statement that feels really good, and then spending 90% of your investment experience under that value, where you just remember, well, I remember when my portfolio hit this number, it was at an all-time high. Most of your investment experience will be under the all-time high. And this is just the price we pay as long-term investors. In order to get the all-time high over those long periods of time, in order to receive those 25 on average long-time highs over the course of a year, which is great, we need to spend the rest of those days, 90% of our days, living under the all-time high. And so it's just as important when we're dealing with long-time highs, not to remember that the all-time highs happen, but to remember that most of the time we are going to be seeing portfolio values under that. And so don't get too excited when the market goes up. Don't get too excited when it goes down. This is all part of the way that the market works. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.